Welcome to TradeTheMBI.com. This is John. This reports for the 21st, and well, of course, look at this. We're right back up at the peak levels, getting ready to make that push towards the 3,000 number, which will be monumental from a milestone standpoint, at least in a lot of people's minds. Necessary for what we expected just from a general market return post-war construct. This is so typical of the type of move that we would expect to see. So within those aspects, but let's just move along because we've got cyan under red, a little bit of softening here from a DOC steel standpoint, but the momentum of those still carrying forward, rising shakeout should help keep things pretty close to where they're at, if not improved from this level. NASDAQ slightly underperforming, relatively speaking, but also it's seen a little bit better from a DOC run, but it's had some periods of overbought, meaning there's a little bit less money flow going into those areas. And of course, with the tensions in, Iran, as well as the potential for softening of U.S. markets, we've had that turnaround in the euro from the higher pivot. Not a big deal, still caught well within that similar range. It could break out of it, though, given the situations, particularly if nothing negative comes out of the EU, which could happen at any possible time. But this definitely helps U.S. Companies, which is giving the market some solid support there. And of course, oil skyrocketing. We actually knew that this would have more legs even beforehand, so it kind of begs the question, what came first? The buyers were already into this one, right into this range right here, and then boom, we saw a complete crossover, peak right below the 23%, so not too big a shock from that standpoint. And of course, gold, which we knew was already in a beautiful run with always a buy from, the beginning of this turn of green here. Actually started a little bit before then, around from the next bar right here on the open, which was all the way down in the 121 range and all the way up to the 131. So still consistent. In fact, new crossover steel coming up, shorts completely vacating the setup for gold and commodities, and that's just because of the fear factor, the potential for a war that starts, that gets escalated. It's interesting that the U.S. did not strike, so is that a pullback from the brink of war, or is it just a pause until something maybe more severe? So this uncertainty certainly is adding to those commodities, but it's not affecting the market because that's not really a dynamic play at this particular point, and I don't think anyone sees it as a threat to global growth or anything like that. What I wanted to do is go back to the 50K here, because we've been talking about this on the Skype chat with the use of the Power Mode 2 with automation and that. And my suggestion is slightly different and always has been about the way to utilize that. Certainly there are times when you're not around in the market, and I think that's always the best point to activate the Power Mode 2, but I was careful to put into it this ability of it to, whenever a signal of softness or weakness comes in, where it prints a stop value. And we kept talking about these in various video reports. And let me enlarge this most recent entry from right back over here. And I've been talking about, we had that stop that was at the 20, we got up to the 23, and I was talking about the stop from there. And then most recently in the morning, 52 came in as the number. And the reason it's significant is because if you want to trade intraday, but within this broader long setup, it does give the opportunity to potentially have better exits than the program will, because the program isn't going to execute an exit until the end of a bar at any given time. So the breach of the stop may happen, and it's still not going to execute that until that bar closes. So we can see that, in this case, 29.44 is the exit. So that's a significant 8-point variant from what we actually saw from the stop. And so when we look at a 5K, which I tend to prefer to go back down to, you have the ability to exit and create your own new buy above line within using these stops. So from what we were following from that setup going higher was, we reached this super extreme here with above 13.5 with the red DOC, staggering. And that's fine. when the little dip came down, really wasn't a sell because we had not seen any steel come above Cyient and then back below. Yes, it was below the negative 13.5, which meant that there would be some weakness to it. And there did, but then it popped back up, and that's when the real signaling came, because that's when we had steel coming back above it. So when the first DOC spread came in, boom. So you have the opportunity to short. Well, effectively then, your exit is at 58.50, which is significantly above where the 50K stop is, but you just know that you have to defend that level going back above. So when the market started then its decay and you get a buy right down here at 42, well, you've already executed, an extra 16 points within it, and your new buy entry is back down at 42. Now, fine, it's not going to match the one that's on the power mode too, but you've already made a significant improvement from where its exit point at 52, which is right in the middle of all of this range. And you definitely did better than the 44 exit that was executed on the 50K chart. And it allows you to trade the program intraday if you're watching. Now, if you're not watching, my suggestion still is to turn it off after the entry and then just set the stop and make adjustments accordingly. In fact, I'm going to this weekend actually change for everyone some of the input parameters, reducing them. So because a lot of those were fixed anyway, now that we know exactly what some of the longer term ranges are, so they don't need to be on the inputs. That will make it much easier, and I'll make sure that we have a more ample alert setup that will notify, and you would get a message on pager or whatever, text, letting you know when new stop values come in. And this provides a great opportunity because the new buy entry at 42 makes it much more easy to follow along. Now, in this particular case, if we go back to that 50K, it's out. So there's no new buy. So from that standpoint, if you had bought that setup, then you're just a matter of using it from an intraday chart and able to exit accordingly with any new DOC spreads, like the one that took place right about here, still above the zero. So you knew it was going to take it, but it produced a new level in my mind because I used the ABM yellow in this particular spot for new value. And it just gives you the opportunity then to, again, use it as an intraday, but also within the broader 50K. And I think it just becomes extremely effective, and it allows you to utilize both the opportunity of being a day trader when you're there, also not being and following trend move otherwise. And so that's just my 2 cents of it. I just wanted to point that out. That's something that I've practiced for some time, and I know I put it onto the chat as a description of how I do it, but sometimes it's not always easy to see that in visual form, so I thought I would spend some minutes here explaining how, and we'll probably do more of that because it's similar to a utilization of the ABM, and the idea of being short below the ABM gold, using the potential green as a reset, and definitely being short or out of a long position below the ABM green all the time. So that's one of those things that I look at for maximizing returns and still being active within it. Because if there are days I know I'm not going to be around there, you already have your entry, then it's just a matter of adjusting stops with any signal that comes in. As we've seen, this is like from the entry point, 1, 2, 3, 4, 5 days before it exited, so it's a full week. And then the one prior to that was, I think, even longer, because that just kept going and going. Go back to here, so that one was starting from here, 1, 2, 3, 4, 5, 6 days, an extra day longer. So, and there's that potential with it. So I will certainly update those details, and I will be sending that out this weekend so that you'll have an updated version of that, plus any alterations. This is the original one. This is not the beta that I used. So let me just go ahead and point out what the strategy inputs actually are again. So for the saving of time, this is what it looks like when you exit for the format portion of formatting the strategy. And I think we're just going to see a lot of these inputs being ended simply because it's not necessary to have them, and only the ones that will be relevant. Pretty much the ones I will keep relevant will be for stop purposes. because I think everyone should have the opportunity to adjust their risk management, determining what works for them from a reasonability standpoint as far as that value goes. So that will be an alternative. And I think the other one to look at too, when it comes into formatting strategies, you have a secondary element. You need to look at the properties, because for properties, you can have variation. And particularly when running this program, you got to make sure you have for your general 60 plus bars, depending on whether you allow 2 or more contracts. That is definitely an option. And this is another option within the strategy fills. So whether it's intra-bar order generation, if it's enabled, those kind of concepts. And it certainly it does make an impact. So worth taking a look at those on your setups to make sure that it fits within the parameters that you're comfortable with. That's why I particularly like using it from a entry standpoint, because I think it certainly provides that opportunity to be entered into a market. And then just a good till cancel order for a stop going from there makes it quite easy to follow that setup. And what I may even do for this other one is I will have it print what the initial stop is when the program is entered. That will give you clarity as to what the exposure is from an ATR standpoint, because it's based on a multiple of the average true range for the given movement that we've been seeing. So that's a little bit long, but I wanted to go over that because I think this is very effective. It gives an opportunity to really add significant extra points within the program trades, which is already excellent from a profit factor standpoint. So there you have it. As always, trade well. We'll talk again later.